Good morning and welcome to the press briefing of the 88th MPC meeting. The MPC of the Bank of Ghana met during the past week to deliberate on recent global and domestic economic developments. We present highlights of the discussions and subsequent positioning of the monetary policy rate. Since the last MPC meeting in March 2019, global growth projections have been revised downwards, reflecting heightened policy uncertainty on a number of issues, including escalated trade tensions between the US and China, rising political tensions in Europe, unresolved Brexit negotiations, and geopolitical tensions. Growth has been downgraded across the major regions, especially in advanced economies. In emerging market and developing economies, growth broadly weakened, influenced largely by the slowdown in China and concerns regarding the impact of the ongoing US-China trade tensions. Inflation in advanced economies, including Ghana's key trading partners, is gradually inching up as a result of rising crude oil prices, even though core inflation remains relatively subdued due to sluggish wage growth. Across emerging market and developing economies, inflation rose marginally, also reflecting the recent rise in crude oil prices as well as pass-through of currency depreciation in the immediate past, especially in Turkey. In the outlook, inflation is forecast to remain stable in advanced economies due to moderation in wage growth. In the emerging market economy, strong aggregate demand pressures, higher value-added tax, and rising inflation expectations could put pressure on inflation. Global financing conditions, on the other hand, have eased somewhat due to the accommodative monetary policy stance in most advanced economies. As a result, global interest rates are likely to remain broadly unchanged, reducing the risk of sudden portfolio reversals out of emerging market and frontier economies should investor sentiment shift. However, deepening trade and geopolitical tensions, sharper than expected slowdown in global growth, and prospects of a no-deal Brexit negotiations could weigh on financial market sentiments in the near term. Turning to the domestic economy, growth remains relatively strong as the output gap continues to close. The bank's updated composite index of economic activity also shows evidence of increased economic activity, with a yearly growth of 4% in March 2019, up from 2.9% a year earlier. This robust pace of economic activity is supported by improved sentiments from businesses following the Ghana cedi's recovery from the recent sharp depreciation and favorable growth prospects, even though consumer sentiments weakened slightly as a result of the recent increases in prices. Headline inflation has continued to inch up gradually in the 3 months to April, reflecting pass-through effects from the recent currency depreciation. Since February 2019, headline inflation increased from 9.2% to 9.3% in March and further to 9.5% in April. These increases in inflation appear not to have become embedded in underlying inflation, as the bank's main measure of core inflation, that is, inflation excluding fuel and utility prices, eased in April 2019, and inflation expectations remain well anchored. Price movements of Ghana's three main export commodities, oil, gold, and cocoa, show mixed trends. Crude oil prices have witnessed a rebound, supported by production cuts by OPEC and its allies, renewed political tensions in the Middle East, and oil sanctions on Venezuela. As a result, Brent crude prices have fallen by 24.3% on a year-to-date basis to an average of $71.7 US dollars per barrel in April 2019. Brent crude is expected to trade around the same price by the end of the second quarter. Gold prices on the international commodities market inched up on the average by 2.8% on a year-to-date basis to settle at $1,286.2 US dollars per fine ounce in April, due mainly to perceived market risk and increased uncertainty. With the signaling of a neutral monetary policy stance by the US Fed and some advanced economies, gold prices will likely remain subdued. Cocoa crop conditions remain generally favorable. An increased supply from Ivory Coast has provided an added boost to supply expectations, which is not supportive of a price rally. Cocoa prices are therefore likely to remain subdued in the outlook. On a year-to-date basis, average cocoa prices have risen by 5.1% to an average of $2,370.4 US dollars per ton in April 2019. These commodity price movements and increased gold and crude oil production volumes, alongside a relatively lower import bill, had a positive effect on the trade balance. Provisional estimates for the first 4 months of 2019 indicated a trade surplus of 1.3 billion US dollars, compared with a surplus of 1 billion US dollars in the same period of last year. The current account balance for the first quarter of 2019 registered a surplus of 294.5 million US dollars. This was on the back of an improved trade surplus of 794.4 million US dollars and a net outflow of 500 million US dollars in the services and income account. The positive outturn in the current account balance, together with significant inflows into the capital and financial accounts, driven mainly by the March 2019 Eurobond issue, resulted in a balance of payment surplus of 3 billion for the first quarter of 2019. These developments improved Ghana's gross international reserves to 9.9 billion, equivalent to 5.1 months of import cover, as at the end of March, from 7 billion US dollars, equivalent to 3.6 months of import cover at the end of December 2018. As at the end of April 2019, the gross international reserves was 9.3 billion US dollars, or 4.7 months of import cover, largely on account of energy-related debt payments and higher obligations associated with externally held domestic debt payments. The domestic currency market has calmed down since the recent bout of volatility in the first quarter, while other emerging market economies currently appear to be facing some volatility on the currency market. This is due to the supportive fundamentals, as well as the improved supply in the foreign exchange market following the Eurobond issue. In the year to May 2019, the Ghana cedi cumulatively depreciated by 5.8% compared with 0.2% for the corresponding period of 2018. However, against the other major currencies, the depreciation was more moderate. Against the British pound and euro, the Ghana cedi cumulatively depreciated by 4.7% and 3.3%, respectively, compared with 1.4% and 2.6% appreciation, respectively, over the same corresponding periods. In trade-weighted terms, the real effective exchange rate remained broadly aligned with the underlying fundamentals. On the execution of the budget, provisional data for the first quarter of 2019 showed an overall deficit on cash basis of 1.8% of GDP against the target of 1.4% of GDP, and the primary deficit of 0.8% of GDP compared to a targeted deficit of 0.3% of GDP. The higher than projected fiscal deficit outturn was due to the lower than projected domestic revenue collections, which were not accompanied by expenditure rationalization. The revenue shortfalls were mainly from personal income taxes, import duties and levies, and non-tax revenues. Over the quarter, total revenue and grants amounted to 10.1 billion Ghana cedis, compared with the program target of 12.4 billion Ghana cedis. Total expenditures was 16.5 billion Ghana cedis, slightly below the target of 17.3 billion Ghana cedis, and representing a 37.7% annual growth. In line with the above developments, the stock of public debt rose to 57.5% of GDP at the end of March 2019, compared with 49.5% of GDP at the end of March 2018. Of the total debt stock, 11 billion Ghana cedis represented bonds issued to support the financial sector cleanup. Growth in broad money, M2+, remained generally stable over the 12-month period to April 2019, reflecting continuing strong expansion of the economy. Annual growth of M2+ was 18.5% in April 2019, compared with 17.5% a year earlier. The growth in total liquidity was supported by expansion in net foreign assets, reflecting the impact of the Eurobond inflow. Annual growth in reserve money, however, slowed to 7.9% in April 2019, compared with 14.8% annual growth in April 2018. Private sector credit growth continued to gain traction as banking sector liquidity improved, supported by the recapitalization exercise. Annual growth in private sector credit was up by 19.8% in April 2019, compared with 5.6% growth in the same period of 2018. On a year-to-date basis, private sector credit recorded a 5.1% growth in April 2019, compared with a contraction of 4% last year. In real terms, private sector credit expanded by 9.4%. Furthermore, the bank's latest credit conditions survey showed a net easing of credit stance on loans alongside increased demand for loans by enterprises and households. Development on the money market to the end of April 2019 generally reflect marginal downward changes in interest rates on government instruments between February and April 2019, reflecting a shift to foreign financing of the budget after the Eurobond issuance. The 91-day Treasury bill rate has stabilized at 14.7% between February and April 2019, up from 13.3% in April 2018. Similarly, rate on the 182-day instrument was stable at 15.1% for the same period, compared with 13.9% in April 2018. On the secondary bond market, yields on the 7-year, 10-year, and 15-year bonds moderated from 20.98 to 21.1 and 21.4% in February 2019, compared to 19.8, 19.97, and 20.7% in April. The weighted average interbank lending rate, which shows the rate at which commercial banks lend to each other, also dropped to 15.2% in April 2019 from 17.5%, following trends in the monetary policy rate. In the same direction, average lending rates of banks declined, though moderately, to 27.7% from 28.2% over the same comparative period. The latest assessment of the banking sector shows that the sector has become more resilient and is well capitalized, solvent, and liquid. Stress test results point to additional capital and liquidity buffers in the event of shocks from exchange rate and interest rate movements. Profitability is also on the rise as banks deploy their additional capital on interest-earning assets. There is also evidence of strong deposit growth in the industry, pointing to a return of confidence in the banking sector. Over the first 4 months of 2019, banks' total assets amounted to 109.9 billion Ghana cedis, representing an annual growth of 12.4%. The growth in total assets was funded mainly from deposits, which grew by 19.6% year-on-year to 73.1 billion Ghana cedis. The industry's financial soundness indicators have improved, with the capital adequacy ratio at 21.4% in April 2019, significantly higher than the prudential requirement of 10%. Under the new Bank of Ghana Capital Requirement Directive, the CAR was 17.4% compared with the 13% prudential requirement, which includes a 3% buffer. Asset quality, however, remains a key challenge and a major constraint to credit expansion in the banking sector. Although the non-performing loans ratio has declined from 23.5% in April 2018 to 18.9% in April 2019, it remains high and points to the industry's exposure to credit risk. To help reduce the NPL ratio further, banks are working to strengthen their credit risk management practices and loan recovery efforts. Summary and outlook. In sum, the committee observed that global growth has moderated with downward revisions for both advanced and emerging market economies. The slower pace of growth is expected to continue over the first half of 2019, underpinned by escalating trade and geopolitical tensions. Although core inflation remains subdued, global inflation has picked up slightly on the back of higher oil prices. Forecasts show that inflationary pressures are expected to remain contained, influenced by moderate wage growth and concerns about the health of the global economy. The accommodative monetary policy stance by most advanced economies broadly offers some scope for favorable global financing conditions, This could have positive implications for emerging market and frontier economies with strong macro fundamentals as investors search for higher yields. These developments could impact positively on Ghana through the trade and credit channels. On the domestic front, economic growth remains steady and is projected to gain some additional momentum over the horizon, supported by crude oil production. Early indications already show that economic activity in the first quarter is picking up pace, as evidenced by the bank's CIEA. Other factors such as improving business sentiments and credit growth are supportive of growth in the outlook. On fiscal developments, the committee noted that implementation of the budget in the year to April 2019 shows continued challenges with revenue mobilization alongside increased pace of spending, which poses some risks to the fiscal outlook. Expenditure pressures have been exacerbated by payments associated with the energy sector. These are exerting financing pressures on government, and more stepped-up efforts will be required to ensure total realignment of expenditures to revenues. The committee observed strong external sector developments in the first quarter, emanating from a strong trade surplus outturn and improved inflows into the capital and financial accounts. In the outlook, the trade balance is expected to record surpluses bolstered by the oil sector and a pickup in private transfers to support an improving current account balance. However, there are also significant outflows associated with energy-related debt, bond maturities, and coupon payments, which would have to be managed over the rest of the year. On the inflation outlook, the committee noted that the recent exchange rate pass-through has slowed the disinflation process, leading to a slightly elevated inflation profile, as shown in the latest forecast. However, core inflation remains subdued, and inflation expectations fairly anchored. Under the circumstances, the committee decided to keep the monetary policy rate unchanged at 16%. The committee will continue to closely monitor both global and domestic developments and stands ready to take appropriate measures if necessary to maintain price stability. Thank you.
Thank you, sir. It's question time, please. And as usual, you mention your name and the media house you represent. Also, please, you are going to keep it straightforward. Keep it short, simple, straightforward. Bear in mind that your colleagues are also waiting to ask questions. I pick a question, just a slot. You have a slot for now. We are going to have 2 sessions, so I'm strictly going to adhere to the 2 rounds. So a question per each.
All right, good morning, Governor. You mentioned that the banks, sorry, my name is Obed Atayebua from Business and Financial Times. You mentioned that banks are well capitalized. However, we have 5 banks that are still undercapitalized, waiting for the GATS money. Please, can you give us timelines on when we should expect, or the banks should expect the money to hit their accounts?
Thank you, Obed. Please, the questions should be limited to the statement the governor delivered. So let's go by that, at least. It's in it, yes. Don't worry. Richard, please.
Good morning, Governor. My name is Richard Anekweabe. I'm with City FM, City TV. I just wanted to find out from you, when, I think about a week ago or so, we heard you talk about the the recoveries that receivership process has been able to make, and where you talked about, I think, about 731 million cedis. We just want to know the breakdown, whether it's coming from the PwC or the KPMG aspect. And then also when it comes to some of the compliance process, we know the BOG has a requirement that banks are supposed to publish their end-of-year financials by end of the first quarter of the subsequent year. And we realized that not a lot of the banks complied with this particular directive. We want to know, has it come to your notice? And if it's come to your notice, what are you doing about these banks? So we don't have a recurrence of that process where banks were not publishing their financials or they were not keeping to your timelines. Thank you very much.
Yes, you please. Your name and the media house.
My name is Etonam Say. I report for TV3 and 3FM. Governor, please, I didn't hear anything about the cleanup of the savings and loans and other financial houses sector. I want to find out first whether we are going to be seeing a reduction in the numbers. With the investor banking cleanup, we reduced the numbers from 36 to 23. If you combine savings and loans, 38, financial houses, 22, about 60. Are we going to see a reduction in the numbers? And if we are, when are we going to see this? The last time at the MPC said soon. I don't know if we can get a definition to the soon. Also, attaching to that, we know 2 billion cedis has been released for the cleanup, and we want to know whether it's enough for the cleanup, because we know that some savings and loans have got some huge holes. Thank you.
My name is Toma Emiri. I edit Go Street Business newspaper. First of all, Mr. Governor, you've said several times over that we need to reduce the amount of foreign portfolio investment in our CD-denominated bonds, and government seems to be in agreement with that now. I want to know what is being done to attract more local portfolio investment into our CD-denominated bond issuances. Then the other question I have is, now that we've taken out 3 billion euro bonds proceeds, I understand about 1 billion out of that was supposed to be used for restructuring our public debt. What exactly has been restructured out with that $1 billion from the Eurobond proceeds? Thank you.
We're taking the... Okay. Sorry.
Is your round one or?
George will end the round. My name is George Uafe from Joy FM TV. Just a quick one on what Etonam said. We also understand that there's been almost $1 billion being released from the Ministry of Finance for the cleanup of the microfinance sector and rural banks. I'm just asking that, all other things being equal, when are we going to start the cleanup for these particular areas? When you go through the EIU report that was released, they are still giving some signals about the city coming under some pressure later this year and even going forward. Do you think that the time has come to tweak the process or the measures or the policy measures in trying to stabilize the city in the short to medium term? And you've also lamented about these power contracts and all the rest, putting some pressure on the exchange issues. What are you doing about that as well? Thank you. Sir, you're ready.
Okay, thank you very much for those questions. I think that I will start with the last question asked by George on the outlook for the city, which I thought had been well explained, that we should expect to see a relatively stable currency over the medium term, over the short to medium term. I had said this in the last 2 or 3 months, and I still continue to say that we should expect that the cedi would remain stable over the short to the medium term on the basis of the fact that we are currently fairly well positioned in terms of the level of international reserves that we have. But obviously, going forward, we would have to manage some of the outflows that are projected for the rest of the year, especially payments that are associated with the take-or-pay arrangements regarding the energy sector. Those are areas that are, in a sense, were previously unplanned. These are unplanned payments which the Bank of Ghana has had to recently take on. So it becomes an additional source of pressure in the outlook. But we anticipate that we would be able to manage those impacts effectively. Now, that in a sense is also related to the question that I believe was asked on the debt, and to set aside about $1 billion to manage the domestic debt. I should tell you that there is quite a bit of progress on that, because out of the $3 billion US that was contracted, nearly 300 million was used to pay off sovereign debt. I think the 2022 debt, 300 million of that was paid off, and we have about 700 million which has been ring-fenced into the sinking fund to be managed to reduce domestic debt. So operationally, we have the room to pay off some of the domestic debt if government so wishes. Which brings me to the question on the microfinance cleanup. And I heard somebody say 2 billion, but the more accurate number is closer to 1 billion. I think 900 million plus. So yes, the ministry has managed to open an escrow account with the resources have been credited to the account. So we are in a better position to plan towards the cleaning up of the microfinance industry. But we need to be careful about the process. So this is what we are spending a little bit more time to understand the population of microfinance institutions out there. Secondly, we also need to make an assessment of whether our objectives would be fully met just by concentrating on the microfinance sector and leaving the other SDIs as they are, or trying to find the most vulnerable sections in the other SDIs. By that I mean the savings and loans and finance houses, and see whether adding those to the microfinance intervention would make better sense. So this is really where we are. As you know, the total bill, if you put both of them together, is closer to 7 billion. So the budgetary resources are not there to undertake an operation of the magnitude of 7 billion. We have just $1 billion. We can take care of the microfinance institutions. And we need to make an assessment of whether all the noise that we are getting from, institutions like First Allied, that everybody knows is in the deep trouble, scattered all over the country. But it's not a microfinance. So the problem would not have been resolved by just concentrating on the microfinance part of it. So this is where we are. Once we are very clear on exactly what to target, or which portions of the other SDIs might be necessary to deal with at this stage, we would start the work on that. So just give us a little space, and we would communicate that shortly. Now, the other question that I have, other than the question on the cleanup, this one on the receivership process, 731 million. You are right. I think it's both the PwC part of it and the KPMG part of it. But more of PwC, which I think it's about 500 million. So the rest of the 200 could have come from the KPMG. Regarding compliance with publication of annual accounts, all the banks, except the GAT banks, have published their accounts. This is what I hear. So it is not true that the banks are not complying with that rule. All the banks, with the exception of the GAT banks, have published their accounts. Even of the GAT banks, I'm aware that Prudential has published their accounts. So, and ADB also has published their accounts. So we are quite confident, given the government's commitment to ensure that the GAT banks succeed. If you remember, we had mentioned at this forum that given that government guarantee, that sovereign guarantee, we regard GAT banks as banks that meet the minimum capital requirement. So that should address the question on the GAT banks. I cannot give you the exact timelines for when the money would hit their accounts. I think you should try to get that information from the GAT. I believe these are all the questions I've had so far. Is there any?
We asked about what government and Bank of Ghana is doing to get more local portfolio investment into city-denominated medium to long-term bonds to reduce the volatility caused by foreign portfolio investors going in and out.
Well, I don't think that the discussion is about the crowding out of domestic investors, right? If it were about the crowding out of domestic investors, then you'll be right that once you reduce the external investors, you create room for domestic investors.
I don't mean crowding out, it's just that they're not interested.
No, they are. I mean, from the data that we see, there are a lot of domestic investors, all these pension funds, investing in the medium-term instruments, this 5-year, 10-year instruments. A lot of the pension funds are invested there.
Okay, so we are moving on to the second and final round. So, you please.
Thank you very much. My name is Otu Malise. I'm with the Ghana Daily News. Governor, please, you have taken credit for cleaning up the banking sector and describing it as resilient, yet I get a sense of frustration about the non-performing loans on the books of these banks. What would be your advice for them to keep to their core mandate? Thank you.
Hello.
Good morning, Mr. Governor. I have just two questions. You said the CD depreciated cumulatively by 5.8%. I just want to know whether it's likely to threaten your inflation target for this year, the 8 plus minus 2%. My second question is, when you look at the Economic Intelligence Unit report, they are projecting that the CD is going to depreciate by 6.5%, 6.6 cedis, 50 pesos in the year 2023. What's the Bank of Ghana doing to stem the CD depreciation? My last question.
Thank you, please.
Last question.
Please, thank you very much. Just this.
Thank you very much, sir. My name is Justice. I work for the Xinhua News Agency. A quick one, please. Has your outfit or the central government issued a bond in March concerning the banking sector reforms? If yes, how much is it and what is it supposed to be doing? Now, secondly, if I heard you well, then it means that the energy sector, some energy sector debts were part of the causes of the depreciation, a drop in our reserves, and also budget deficit over the period we are looking at. So I would like to know what is the cause of a new energy sector debt issue again after the issuance of the ESLA. Thank you.
Yeah, Echo. Excuse me, just use the mic there, please.
All right, Governor, thank you. My name is Echo from Bloomberg. In your lines, you made a statement that deficit was missed on account of a lower than anticipated domestic revenue, which was not supported by expenditure rationalization. Now, that sounds quite similar, and we look like we are entering into an electioneering year soon. And then expenditure becomes quite of a challenge, bit of a challenge. History has told us. Do you see any threats, so to say, to your monetary policy stance or your decisions on account of expenditures that may be classified as overruns, as we have seen, on account of the months ahead of us? Thank you.
Well, we have the last question. Yes. No, please, you. Yeah.
Okay, thank you, Governor. Sorry, I think sorry, I'm Senna from GH1 TV, Daniel Senna from GH1 TV. I think about a week or two ago, you indicated that part of the issues with recovering the assets from the collapse, the banking sector a while ago was that there was fraudulent documentation. And so I wanted to know if there's a way forward from that. How are we able to recover the funds after all of that? Thank you.
Thank you. Sir, please, we are back to you, sir. Thank you.
I think we will give them one more round. But let me take the questions that I have so far on the EIU's views about the exchange rate. I don't think that these projections are plausible, especially to be able to project the exchange rate in 3 years. That's really a very daring thing to do, and you find that such projections more often than not do not turn out to be correct because the horizon is too far out. But I can tell you that our objective is to keep the city as stable as we can and also keep our inflation on target. This is what we are trying to do. And in trying to achieve our inflation target, exchange rate stability is very key. So the question about whether the 5.8% represents a challenge to our inflation outcome, yes. I mean, if we had had a slower depreciation of 3% or 4%, it would have made our job in terms of keeping inflation below our targets easier. But now we have to put in a little bit more effort in trying to keep inflation within the target bands. And as you have observed, we have seen this creeping over the last 3 months, the creeping of the headline inflation from 9% to 9.2, 9.3, and now 9.5. And we are saying that this creep, part of this creep reflects the exchange rate issues that we have had over the past 3 months. We do not think that this has led to a dislodging of inflation expectations. As you know, within our inflation targeting framework, expectations on inflation matter. So for us, I mean, inflation expectations from the surveys that we have done still look well anchored. So we think that what we have seen in terms of this creep probably will not continue. Otherwise, the headline inflation would get out of the target band. So that's where we are. We are still very much focused on delivering the inflation target for the year. In our view, such long-term projections of exchange rate are almost meaningless. And so far as we are focused on our inflation target, we don't think we will be anywhere near the EIU's projections. Now, to move on to the series of questions from our colleague from Bloomberg about the deficit and the fact that the deficit was due to revenue shortfall, which was not compensated by a reduction in expenditure as it used to be the case in the past, and whether this constitutes a threat to us in terms of the outlook. And I think that you are right to point out these things, that over the last 2 years, each time we had seen some revenue difficulties, we had seen expenditure being used as the tool to manage the impact over the outcome of that shortfall. But the effort in this first quarter of 2019 in terms of managing the impact hasn't been that strong. Does this represent for us a threat to the outlook? This is the question you're asking. I would have said yes, but for the fact that we have received commitments at the very highest levels of government on fiscal discipline, but for the fact that we also have legislation which limits our deficit to 5% in the law. So we are hoping that some of these, what do you call them, rules would have an impact in terms of, the risks associated with fiscal slippage going forward. Then the question on the impact of energy sector on the exchange rate. Somebody asked a question on that, on the impact of the energy sector on the level of reserves, which I think it's also a legitimate question. We are seeing that we are paying almost $140 million a month, right, for these energy-related take-or-pay arrangements, and this constitutes a major source of outflow on our cash flow, with an impact in terms of the level of reserves. You can see that we lost almost how much? 600 million in the last few months. So these are some of the pressures that we are managing almost on a day-to-day basis. Question from Ghana Daily News on NPLs. I had expressed concern about NPLs. Yes, as you know, most of the NPLs are part of the legacy issues that we have in the financial sector, also energy related. If you looked at the core NPLs, maybe they're around 10%, but the legacy NPLs are still a problem. We are trying to get the banks to write them off, those that are fully provisioned for to be written off with the appropriate disclosures. And then obviously going forward, much as the banks are lending, we want to ensure that their risk management practices are enhanced to avert the accumulation of further non-performing loans. I believe these are all the questions I have had. Justice, eh? What was your question? Yes. That's a very good observation. If you look at the debt stock for the first quarter, you will see that there's been an increase in the debt stock of about 5% of GDP, representing the sovereign bond issue of $3 billion. But in addition to that, you would find that there was a bond that was issued for the banking sector 1.4 billion. This is for the last two banks. This is the net gap for the last two banks. This is the Premium Bank and Heritage Bank. The gap there was about 1.4 billion, and the instrument was issued in March. So I agree to do one more round, and then we can close.
Please hold. Mustafa Sule.
Good afternoon, Governor. My name is Suleiman Mustafa. I write for the Daily Graphic. Sorry. Yes, Governor, you've had high commendations from the IMF for the reforms that you have done in the banking sector. For some of the banks, it's been 2 years now since the reform started, and you talked about prosecution of some of those officials found culpable to have breached corporate governance issues. Almost 2 years down the line, we are still talking about who will prosecute them. Then the question is, do we really have evidence to prosecute them? If we do, would that really take 2 years to start the prosecutions? Thank you.
No, me. Okay, you. Right, so I'm Isaac Yedu. I'm with the Finder. My question is related to the speaker who just left off. Mine has had to do with your call for special courts and judges to sit on cases coming from the cleanup. Some industry practitioners have asked, why are you lamenting? Go ahead and talk to the CJ, get the courts in place. Have you made any step? Do you intend doing so? How soon? Thank you.
David Orton, RFE or RFI. My governor, good morning. Bonjour et bonne santé. You've been believed to ask the Chief Justice of Ghana for special courts to deal with infractions. Yeah, but I want to know. Yes, there are different angles. Yeah, in Bolivia and Nigeria, they use the army to enforce certain things. So we don't know how these things will take place. The enforcement will take place for infractions, banking infractions in Ghana. Thank you, Maxi.
Thank you very much. I think that's the end of that last round. We probably should not even have opened it. So let me start with Mustafa's Daily Graphic question on the issue of prosecutions. As you rightly said, we've been at this for nearly 2 years. The Bank of Ghana does not prosecute. I'm sure you're aware of that. So in doing their work, the receivers have tried to follow up on what they call the civil issues, those that they can go to court and try to recover from the directors and the shareholders of the banks, and also from customers who owe these banks. So the receivers have been going to courts to try to preserve assets and recover, assets that have been lost to shareholders and to recover from people who owe these banks. The processes have not been very straightforward. There are all kinds of difficulties in terms of the adjournments and the delays and all of that. So this is why we had suggested that maybe if we had courts that were designated solely to deal with these banking issues, we would be able to probably see faster recovery of some of these resources that have been lost in the crisis. But the prosecutions are not for the receiver to do. This would go through the appropriate state agencies, and I'm aware that the IOCO and SIT and all of these other prosecuting agencies are doing their work. I'm aware that some of these, what do they call them, dockets have been sent to the Attorney General's department. So the processes are a little slow, but hopefully we will get there. So that does it for the question on the prosecutions. Whether we have raised this directly with the Chief Justice, yes. We have had discussions with her on that matter. Thank you.